What's up, everybody? Lately, I've been seeing all of these headlines like Reuters, U.S. home sales slump to a 12-year low, glimmers of hope emerging, and Forbes going up from here, home prices post small increases as rate drop lures buyers, and even Redfin's latest housing market update, home prices post small increase as mortgage rate drop attracts buyers, which all seem to indicate that maybe we've hit bottom and rates will continue to come down and the market will start to recover. But then I dig a little deeper and find that these expert industry insiders have vastly different opinions about the immediate future of the housing market. They range from the most bullish Realtor.com, who have predicted that home prices will rise 5.4% in 2023, to the most bearish, which is John Burns Real Estate Consulting, which predicts that home prices will fall 20 to 22% in 2023. My guess is that both Realtor.com and John Burns Real Estate Consulting could be right depending on where you live. In Lance Lambert's latest article in Fortune magazine, he notes how home prices are expected to shift in 300 different housing markets, according to updated forecasts by Zillow and Moody's Analytics. Zillow being more bullish and Moody's being more bearish. And Yahoo Finance just came out with their list of the 15 most vulnerable housing markets in America right now. So today we're going to take a look at the analytics to see which regions the industry insiders think have already started to recover or will recover the fastest, and which regions they think will continue to correct or even crash. And is the worst behind us, or should we prepare for more pain? Let's just dive right in. U.S. existing home sales plunged to a 12-year low in December, but declining mortgage rates raised cautious optimism that the embattled housing markets could be close to finding a floor. This is a quote from Lucia Mutukani from the Reuters article dated January 20th. Average mortgage rates dropped to 6.15% during the week ending January 19th, their lowest level since September. And the median home sale price increased 0.9% from a year earlier to $350,250 during the 4 weeks ending January 15th. The biggest increase in a month, according to a new report from Redfin. So prices remain high because buyer activity has started to pick up since mortgage rates dipped a little bit and inflation has shown some signs of slowing down. In Redfin's latest housing market update, they note that pending home sales fell 29% year over year, a significant decline, but the first sub 30% drop in 3 months. In addition, mortgage purchase applications rose 25% from the week before, during the week ending January 13th, a jump that's likely to lead to more pending sales in the coming months. So more activity suggests that demand is getting stronger. The people who started browsing homes online and scheduling house tours at the end of 2022 are now turning into actual home buyers, said Redfin Deputy Chief Economist Taylor Marr. Lower competition, falling mortgage rates, and seller concessions are bringing some buyers back to the market. That's helping keep home prices afloat, which is one bright spot for sellers.
I see the light, the air.
But many buyers are still sitting on the sidelines, and demand could dip back down again if inflation declines slower than expected or if mortgage rates rise again. The latest housing forecast by Zillow economists has U.S. home values falling 1.1% between November of 2022 and November of 2023. Meanwhile, Moody's Analytics, who's in the bearish camp, has national home prices falling 5.1% between the fourth quarter of 2022 and the fourth quarter of 2023. Peak to trough? See, I'm saying it right, trough. Thank you for correcting me. Moody's expects U.S. home prices to fall 10%. But keep in mind, when a group like Zillow or Moody's Analytics says U.S. home prices, they're talking about an aggregated view of the entire country. As I always say, real estate is very localized. These results can vary significantly depending on where you live. So So let's get more specific. Which places have prices falling the most, and which places are going to recover the fastest? According to Redfin, prices fell 10% year over year in San Francisco, 6.7% in San Jose, 5.5% in Austin, 4.3% in Detroit, 3.8% in Seattle, 3.7% in Phoenix, 3.4% in Sacramento, 3.1% in San Diego, 2.8% in Anaheim, California, 2.5% in Chicago, 2.4% in Los Angeles, 2.3% in Oakland, California, and 2.2% in Boston. They fell less than 2% in Riverside, California, Portland, Oregon, New York, Newark, New Jersey, and Las Vegas. According to Zillow in Lambert's article, among the 897 markets Zillow measured, it expects 658 markets to have falling home prices between November of 2022 and November of 2023. That includes markets like San Jose, down 7.2%, Grand Forks, North Dakota, down 6.7%, Odessa, Texas, down 6.4%, San Francisco, down 6.1%, and Santa Rosa, California, down 5.3%. Meanwhile, Zillow expects 239 markets to see positive or flat home price growth between November of 2022 and November of 2023. These include markets like Atlantic City, New Jersey, up 4.2% projection, Homosassa Springs, Florida, up 4.2%, and Yuma, Arizona, up 3.7%. They have an interactive map in the article, so you can click on your area if it's highlighted and see what they're saying. When I clicked on the DC area, they said they expect home prices to drop 3.4% between November of 2022 and November of 2023. And I'll put a link below so you can try it out yourself if where you live is highlighted. Substantial declines in mortgage rates, down to 6.15% as of Thursday, and promising data showing a decline in inflation, coupled with still low inventory by historical standards, provides the basis for Zillow's forecast continuing to rule out the possibility of double-digit price declines in 2023 for the nation as a whole. Okay, let's see what Moody's Analytics is saying. Among the 322 regional housing markets analyzed by Moody's, 178 markets are expected to see at least a 5% decline in home prices between the fourth quarter of 2022 and the fourth quarter of 2023. This includes markets like Morristown, Tennessee, down 10.3% projection, Pocatello, Idaho, down 9.9%, Muskegon, Michigan, down 9.7%, Boise, Idaho, down 9.5%, and Santa Cruz, California, down 8.8%. When I click on the DC area, it shows that they think that home prices will go down 5.74% between the fourth quarter of 2022 and the fourth quarter of 2023. And to be honest, just like in the rest of the country where I am in the DC area, it just really depends on the neighborhood by neighborhood, house by house, if prices are going to be going down or if they're still going up. But let's get back to Moody's. While they expect sharper corrections in markets like Boise and Phoenix, the firm believes that markets like Baltimore, only down 2.3% projection, and Chicago, down 2.6% projection, will fare better. The latter markets, according to Moody's Analytics, just aren't significantly overvalued. But while home prices may vary market to market, the one thing that they all have in common is the lack of inventory. Rick Shargo, the Executive Vice President of Market Intelligence at Optimism Data, believes that the lack of inventory will help most markets avoid a housing crash. We're estimating about a 5% drop nationally, says Sharga. Some markets, believe it or not, will probably see prices continue to increase. Low housing inventory has been a challenge since the 2008 housing crash, when the construction of new homes plummeted, and it hasn't really recovered. And with low supply, the demand, even though it's gone down significantly since rates started going up, is still enough to sustain these higher home prices. According to the National Association of Homebuilders and the Wells Fargo Housing Market Index, homebuilder confidence rose 4 points in January after 12 straight straight months of declines, which may be a sign building could increase in 2023. This would really help with inventory. Just to give context, in a housing market crash, you would normally see 20 to 30% drop in home prices and a decline in home sales, far more than what's presently happening. Another crash symptom that's missing is a huge jump in foreclosure activity. Although foreclosure filings are up 72% from a year ago, they are still lower than the pre-pandemic numbers. 18 months after the end of the government's foreclosure moratorium, and with less than 5% of the 8.4 million borrowers who entered the CARES Act forbearance program remaining, foreclosure activity remains significantly lower than it was prior to the COVID-19 pandemic, said Rick Shargo. And Nicole Bashode, an economist at Zillow, said that even as the foreclosure moratorium was lifted, we didn't see a huge flood of foreclosures because people have so much equity. It makes sense since home values went up about 40% over the last couple years in most places. I think we're more likely to see the market cool rather than crash, Sharga says. Okay, let's take a look at Yahoo Finance's list of the 15 most vulnerable housing markets in our country right now. We'll start at number 15 and work our way up to number 1. 15, Orlando, Florida, Knoxville, Tennessee, Stockton, California, Jacksonville, Florida, San Diego, California, Tucson, Arizona, Tampa, Florida, Phoenix, Arizona, Bakersfield, California, Sacramento, California, Las Vegas, Nevada, Northport, Florida, Cape Coral, Florida, Boise, Idaho, and the number 1 most vulnerable U.S. housing market, according to Yahoo Finance, is Riverside, California. So what do you guys think? Do you live in any of these places that have been mentioned, both by Yahoo or by Moody's or Zillow? If you do, definitely comment below. Tell us what's happening where you live. It's the best way that we can really understand what's happening in our housing market. Where I am in the DC, Montgomery County, Maryland, Northern Virginia market, I am still seeing multiple offers and houses going at or above the list price if they are priced right and they show well. I hope you got some value out of today's video. I think it's really important to bring you the most up-to-date information on the housing market so you can make the best decisions for you and your family. If you did get some value and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It just motivates us to make more videos. Thanks for watching. I do appreciate it. Bye!